And here we go. We're getting very close to the release, and it's hitting the wires now. On the producer price index, this is November. I don't have October, so the comps get a little weird. Up 0.2 as expected. Strip out the all-important food and energy. Good news. Unchanged. That's definitely much cooler than we were expecting. And without the October read, what I would say is that unchanged would be the smallest going back to August when it was down 0.1%.
So what's the problem with this news? Well, as he progresses, he's going to explain to us how inflation, it's getting a little bit worse. So if you're a homeowner trying to figure out, rate's going to go down a little more, maybe you're a home buyer thinking, okay, if they go down a little bit more, maybe I can afford that house. My goal is to explain to you guys what in the heck's going on with those and why? And the reason why I do this, folks, I'm actually a loan officer and licensed in all 50 states as well as Puerto Rico. If you're out there and need some help, I'd love to help you. But let's get back over to Rick. I want to show you the rest of this where it doesn't come with good news when it comes to inflation. So mortgage rates really didn't move today on this news, which I thought they would. But the other markets, how did they fare? Well, let's get back to Rick, see how bad this is. And then I'll show you the market reactions to all this and give you my thoughts on what we're going to go tomorrow. So, Rick, take it away for me, my man.
Let's strip out food, energy, and trade, and it's up 0.2 as expected. Now, here we go on the year-over-year numbers, in my opinion, the most important. Year-over-year final demand, 3%. Hot. 3%'s hot. I don't know what October was, but that would be the hottest since July when it was 3.2%.
So we're going in the wrong direction. So that's going to tell us, well, the Federal Reserve is probably not going to do anything, meaning that these things aren't going to do anything as well. So if you're new to my channel, folks, check out yesterday's video. I came out with my 2026, my official forecast on where I think rates are going to go. And then last week, I put in the video where I think housing is going to go. So check out those videos. Give me a thumbs up or thumbs down what you think. But let's get over to see what happened in the market today. So based on this news, and that was the biggest economic news we had for the day, saying producer inflation is starting to really start to tick up. You'd think the markets would react, but they didn't do anything. If you go over to the stock market, well, it had a little bit of a reprieve, but nothing across the board here. If you see the Dow Jones down 59, okay, it's just off its record highs. So, okay, maybe a little bit of profit taking. Across the board, doesn't look so bad. The Nasdaq's giving a little bit back. Some of the bank earnings that we went over this morning, some of them are starting to come out not so good. So is that going to take a bearing on this? We're not here for these. Let's get over and see what's going to happen with mortgage rates tomorrow, and they might feed over to what's going to happen with these as well. So the economic calendar for tomorrow is the jobs numbers. So think about what we got this week. We had the CPI, which gives us consumer inflation. Then today we had the PPI, which showing producer inflation is kind of ticking up there. So now tomorrow we're going to get initial jobless claims, how weak's the job market, and then continued jobless claims. Are jobs starting to pile up, or are people being able to be absorbed in the market? That's the biggest concern we have right now. So this is going to give us the direction of where the labor market is right now. And the next few readings on producer inflation and consumer inflation will give us more of a read on where tariffs are going to take us from here. So I do have to give you one, I guess, public service announcement. Folks, I don't get paid for this. Don't click the channel, because if you're out here watching this, you're probably going to apply for a mortgage somewhere, somehow, and you might be looking for a car loan. Well, if you're looking for a mortgage, I'd love for you to use me, but before you do anything, make sure you go to Opt-Out Prescreener. What this does, or what it doesn't do, is allow the financial agencies to sell your data. So let me explain what happens. When somebody pulls your credit for a car loan or a mortgage, the financial institutions, the credit agencies, now have the ability to sell your data. Stop that from happening. Just go to this thing, scroll down, click it, just fill out which one you want. I don't get paid for it. It's just to help you guys out to avoid 30, 40, maybe 50 sales calls. If you don't believe me, don't fill this thing out and go ahead and put in your application. But let's get over to what the economy is looking like right now. And this is why I'm saying rates aren't going to do anything. So if you go over there, there's the federal funds rate. That's where the Federal Reserve right now is saying, we're not going to do anything. And now with President Trump on our ass, we're really not going to do anything. But they're looking at this saying, okay, some of the inflation numbers on the producer side are starting to tick up, and tariffs now might even be coming out today if they're deemed legal or not. If they're deemed legal or not, I will be coming out with a special video on that to explain how this is going to affect things. But then they're starting to look at this. So now they're saying, okay, with tomorrow's jobs report, where is that going to take us? But so far in the inflation numbers, they're not going to come down. So the Federal Reserve is saying, well, what are we going to do? Well, in 13 days, we're going to do this. There's a 95% chance they're not going to cut rates. They're not going to cut rates at this meeting. They're probably not going to cut rates at the next meeting. And then the next meeting after that, who knows? So if you're out there trying to figure out, should you refinance with these rates today? Well, let me give you some tools. So if you're a homeowner right now, I created this tool over through there for you. It is RateWatch 2.1 AI. What is it? Well, we used to have RateWatch 2.0 that I would track. I would personally track these things. But last Friday, when rates dropped way below where they should have been for about a half hour, we had everything trigger. So I got inundated in things I couldn't reach out to anybody. So what I did is we got to put this thing on AI. So we did. So this thing is going to track it on a daily basis. Here's what it does. Put in your mortgage information. I don't sell it. I'm still tracking these things. But it'll track, if your rate goes below 0.5% where you are right now, it'll alert you. If it goes 1% below where you are right now, it'll alert you. Even you put in the interest rate you want to be alerted, what'll happen is I'll call you, I'll text you, I'll email you. We'll go over to what your payment's going to be, what your costs are going to be, and then what your break-even point's going to be. If it's under a year, it's a no-brainer. So let's go now and see, okay, now if you're looking to maybe buy or build, what should you do? I think you're in okay, because I don't think rates, my projections for this year are rates at 5.875 to 6.25. We're basically right in between there now. So could they go up just a little bit? They could. Could they go down a little bit? They could. Are they? Most likely they're going to be flat, and flat as a pancake. And this is the reason why. So folks, if you're out there and you need some help, my name is Dan Frio. I'm a licensed loan officer in all 50 states as well as Puerto Rico. We also have a slogan here that I created, and it's this: one application, one credit pool. We're going to compare your loan to over 30 different lenders. How? Why? Okay, first, how? Well, I work at a bank I'm licensed in all 50 states as well as Puerto Rico. The other thing is the bank that I work at, they're ingenious, and they helped us help build them. And they're like, what does it take to help more and more clients? We're like, better rates, more products. So they're like, okay, wonder if we got set up with over 30 other banks, credit unions, other lenders. So when people call and they want to work with you, we're making sure we're actually reaching out all over the country to see who's got the best rates out there on their behalf. So if you want to check out how this works, please reach out to us. Go to therateupdate.com. You can schedule an appointment over my head, give us a call, even ask Dan a question out there. If you want to already got a loan approved and maybe you're looking to see, Dan, can you scan my rate to see maybe you got a better rate, lower fees? Upload your loan estimate right over there. That's also a loan estimate review tab. What we'll do is we'll create a video and get back with you. What we're going to do is go over, like I always said before, the new payment, the costs, and what your break-even point is going to be. And if we can help you save money on that fee that the other place is charging you and even get you a lower rate, if we can do both of those, I'm hoping to win you as a client. So thanks for watching today. Hopefully now you understand a little bit more about what in the heck's going on with those and why. So thanks for watching. Thanks for subscribing down over there, and make sure you hit the button and the bell down there so every time I post a video, you get an alert. Thanks for watching, folks. I'll be back if we get any tariff news. Otherwise, I'll be at the opening bell to let you know what happens to these tomorrow and the whys behind it. Thanks for watching. I'll see you tomorrow, folks. Bye-bye.